Information provided by Wall Street Petting Zoo is for educational purposes only and not intended to be financial advice. Please consult with a licensed financial advisor before making any financial decisions.
This week at the zoo, the S&P closed down 0.75% for the week as investors weigh renewed lockdowns against more positive vaccine news. Hello and welcome back to the Wall Street Petting Zoo. This is our This Week at the Zoo segment in which we review the previous week's market news and look ahead to the coming week. I'm Christopher Smith.
And I'm Robert Coburn. And today we've got to talk vaccines, lockdowns, and valuations. And then we'll get into some specific things that happened this week in the drug, retail, and cryptocurrency spaces. Have you heard about the vaccine news this week, Chris?
Yeah, so Moderna announced on Monday that its vaccine is 94.5% effective, which beats out last week. Pfizer had reported that its vaccine was 90% effective. So Moderna topped the Pfizer results from last week. But then later in the week, Pfizer sort of retaliated by announcing that its vaccine in the final analysis is actually 95% effective, so 0.5% better than Moderna's number, which makes you wonder how much they massaged their results in order to bring them up to Moderna's level. But there was another piece of it that was more exciting. Did you see the storage issue that?
Yeah, so Pfizer's vaccine actually requires cold storage equipment that most hospitals don't have. And actually, I read this week there's actually a shortage of dry ice. So whereas Moderna's vaccine can be stored in a refrigerator for 30 days, so the highest risk patients will probably be vaccinated from January to March, and then the rest of us starting in April. And they said it was based on priority, and they also said it was supposed to be up to the states to decide who gets vaccinated per state versus being mandated at like a federal level. So the cold storage piece is kind of concerning because if they can mass produce them but they can't store it, it's going to be really tough for states to organize this and make sure that it gets in the right hands at the right time.
Yeah, I think that the federal government has done a pretty good job with like the development, Operation Warp Speed. They poured a lot of money into accelerating the development of these vaccines and making sure that they get priority FDA review. But the delivery is definitely going to be sticky, and I think that there's not a good plan for the rollout of these vaccines and the delivery of these vaccines. So we'll see how smoothly it ends up going in the end. But the fact that Moderna's vaccine can be stored in a refrigerator rather than requiring dry ice is a pretty big deal, and that removes a really, really big roadblock from the delivery. And so I think that's why early in the week this week, the market reacted pretty positively to that news. But the good vaccine news was offset by bad lockdown news, and the market was not quite so excited later in the week.
Yeah, so Rhode Island and Michigan, they announced new comprehensive lockdowns this week, and other states and cities like California, Washington, Colorado, Iowa, Chicago, and New York City imposed a patchwork of restrictions that don't quite rise to the level of total lockdowns, but will still have some impact on business. I know here in California, Governor Newsom has announced a curfew, which I find to be pretty funny because I feel like he was caught in that scandal where he was caught at a restaurant without a mask on in a big group of people, and then now he's punishing the rest of the state by imposing a 10 p.m. curfew. So there's a lot of restaurants here that aren't very happy with that, with the restaurants that are open late to service people who work later, because not everyone works 9 to 5. There's a lot of people who are essential workers that work around the clock. So specifically here in California, there's a lot of heated debate as to whether a curfew is the correct answer for that.
Yeah, I saw that he has like a winery in Napa or something, and that his winery is in like the 5% of the state that is not affected by the new lockdown. So I think there was quite a bit of sort of conservative outcry, feeling like he was making rules for everyone else but not for himself. Be interesting to see how all of that plays out politically in his next round of elections there in California. I think we need to talk about valuations this week too, because I saw a chart earlier this week that showed on a price to sales basis, stocks today are looking pretty overvalued. It looks like maybe even tech bubble levels. Did you see that?
Yeah, and I mean, there's also some analysts out there that are suggesting that the reason why we're seeing this is for the fact that there's so many newer investors, newer, younger investors, and we'll go over this later in terms of cryptocurrency, but with everyone, being sheltered in place for the last year, there's been a lot of younger investors that have nothing to do other than look at their phone, look at their computer, and investing is part of that. So I feel like there's a lot of newer investors that are just throwing their money on the market because they know eventually the market's going to go up. But again, just like with the tech bubble that happened recently, it could go the other direction, and there could be a lot of people struggling if the market has a forced downturn.
I think that's a significant factor, the increased retail interest, and there are a few factors that go into that. So not only do you have people sitting at home with nothing to do, but you have a lot of money sitting in their bank accounts because the savings rate actually increased this year because number one, people got stimulus checks, which put a bunch of money in their bank accounts. And number two, they can't go to stores and spend their money. And so the money that they're making to a large extent is going into bank accounts. So we saw like bank account balances go up and savings go up this year. And I think that rather than going to the store and spending that money, a lot of people are putting it to work on Robinhood. So that's definitely a factor. The result of that is that the average price to sales ratio hit 2.7 this week, which in terms of the historical distribution is in the 100th percentile over the last 40 years. So we are at 2000 tech bubble levels in terms of the price to sales ratio. Now, a couple caveats. It looks a little bit different if you use the price to earnings ratio. And also, that's looking at the market with financial stocks removed. So we're removing banks in that analysis. I'm not sure what the analysis would look like if you put banks back in because I'm using a chart that was prepared by somebody else. So these aren't my numbers, these are somebody else's numbers. But it is looking pretty overvalued out there. And I think it's unclear if the market can move much higher because whereas we did have a large influx of retail investor cash this year, but it looks like financial managers' cash reserves are getting a little low right now. And for stocks to go up, there has to be money to buy them with. Um, Financial managers are now only 4.1% cash, only slightly above the 8-year low a few years ago at 4%. So it seems like maybe the money spigot is getting turned off, at least in the absence of new stimulus.
Yeah, I was gonna say that the only way I see the market going up a lot further, a lot quicker, without a downturn, is if that stimulus gets signed and gets put into place before Biden gets into office, which it doesn't look like that's gonna happen.
Yeah, I mean, Mitch McConnell made some noise this week about how he was hoping to have a deal signed by the end of the week, but obviously that didn't happen. I think that probably what's going to happen with stimulus is that it won't go anywhere until the Senate runoffs and everything get resolved because we still don't know for sure which party is going to control the Senate this year, and the two sides don't know their bargaining position until those races are decided. So the Democrats probably won't want to sign a compromise deal now if they could potentially control Congress later and or control the Senate later and write a better deal for themselves. So I suspect that we will see continued gridlock in Congress until those races are resolved.
Yeah, and we also have to consider that they go on vacation for the winter recess. So there's only a 3 week window in December that they can get this done. And I mean, they have done work at the 11th hour in some extreme cases, usually in the case of a government shutdown. But I don't see them doing that for a stimulus, but based on the fact that the Congress is so spread apart in terms of just working together, like the bipartisanship is just not there.
I do want to say also that there's another factor here in the high valuations right now, which is that bond rates are at an extremely low level. And historically, if people can't get returns from bonds, they start moving into equities. So it may be that if we see, bond rates start to recover, then equity prices will come down. And I have seen at least some bond investors are expecting a recovery in bond rates within the next year or two. So we'll see what happens with bond rates. I'm not a bond guy, so I don't really know what's likely to happen with bond interest rates. I think the general outlook is that bond interest rates are going to remain depressed for a while, but how long that will last, I don't know. And I think in the next couple of years, if bond rates do start to recover, then I think we will see equities come down from those extremely high stock prices. So just something for people to consider as a risk. Let's talk drug retailers. Did you see the big news about Amazon this week?
I did actually, because my wife's asthma medication is really expensive right now. So I actually took a look at the interface for the online pharmacy for Amazon, and it's pretty easy to use. Not gonna lie, it's actually you fill out probably 5 fields, your name, address, and it actually detected that I already had insurance, which was kind of weird and concerning at the same time. But at the same time, I didn't have to pull out my insurance information, so I don't personally have any medication, so I couldn't really take a look at like the pricing difference. But it'll be interesting to see how the Amazon market will come into play when it comes to pricing. We're going to see if they can be competitive, which Amazon has always done a great job of being competitive, mostly for the fact that they usually get a lot of vendors to sell their products there because they know it's a marketplace that everyone is familiar with. So if more people are familiar with Amazon's shopping interface, I think just bolting on pharmaceutical stuff is just going to be something that a lot of people are going to, especially millennials and younger people, are going to flock to.
Yeah, so for those who don't know what we're talking about, Amazon announced this week that it is launching an online pharmacy. And, the traditional drug retail stocks like CVS and Rite Aid and Walgreens Boots took a big hit this week as a result because, of course, competition from Amazon could suck a lot of business away from traditional retail pharmacies. And the other folks that this could be bad for is people who have their own, nutrition brands, nutrition labels that they sell on Amazon. Amazon could easily start launching its own products to directly compete with the people who are selling through the Amazon marketplace. And of course, Amazon has been subjected to some antitrust scrutiny because it tends to people who are selling products through Amazon. It uses all of their data, their sales data on the Amazon marketplace to decide what products Amazon should launch under its own labels in order to directly compete with all those people who are using the Amazon platform. So could be bad for a lot of small businesses that use Amazon, and certainly bad for the big drug retailers. So should be an interesting thing to watch. I think that this will probably be pretty good for Amazon's bottom line, maybe bad for the bottom line of a lot of other folks in this pharmacy space. And Robert, I know that you had some stuff you wanted to say about cryptocurrency. You're much more of the cryptocurrency guy than me, but I did text you a couple times this week because, boy, Bitcoin has been on a real run.
Oh, yes, it has. So, for those who haven't been paying attention to Bitcoin, it was as low as $5,000 per coin back in March. And now we're already getting to closer to its record high of 19,700, which was set back in 2017. So in fact, since October, so since the beginning of October, the price has gone just from 10,000 to just below 19,000. I think I checked this morning. It was a little under 19,000, about 18,800. And we previously discussed the effects the halvening has on the price of Bitcoin. And if that trend continues, we could see Bitcoin skyrocket into the hundreds of thousands if past patterns are an indication of future growth. And this has also affected the other cryptocurrencies such as Ethereum and Litecoin. They've also seen small gains, but it's not as significant as Bitcoin, which is kind of like the flagship of most of the cryptocurrencies. And the main reason why a lot of people believe that the price is hiking right now is not mostly because of the halvening, but it's actually because PayPal's recent decision to allow its users to buy, hold, and sell crypto. And there are additional plans to bring these features to Venmo in 2021. So this is huge because there's no other major transaction vendor out there that does this. So the fact that PayPal is doing this is huge. And I looked at PayPal's stock because of this, and it actually dipped a little bit after this news. And it was actually also after their third quarter earnings report. Not a lot of investors were happy that they didn't provide 2021 preliminary guidance. But if they're charging transaction fees for all these cryptocurrency trades, they could make a lot of money, which obviously is good for PayPal. So I foresee in the long run that maybe PayPal is probably a really smart investment if PayPal is the flagship for these type of transactions. If they're the common transaction medium, they're basically trying to be first to market as a basically major player in that. And if banks don't follow suit, they could fall way behind.
Yeah, crypto is interesting because the question with Bitcoin is always like, is it going to get adopted in a widespread way? And if so, when will that happen? And if you look at where it's been adopted, the answer is mainly cybercrime, speculation on the price, and like some Argentina vendors who, when the Argentina currency got really unstable, they were using Bitcoin instead. But there has not so far been widespread adoption. I think that PayPal, though, adding support for Bitcoin at least has the potential or promise of possibly driving some wider spread adoption of Bitcoin. So that's definitely something to watch. If Bitcoin were to catch on, I think we would see, significant increases in the price of Bitcoin. The big headwind here is that central banks have been talking about introducing their own digital cryptocurrencies, and so if central banks in a widespread way begin launching their own digital cryptocurrencies, they might compete with Bitcoin, and we might see Bitcoin sort of crash in the future. Definitely the platform support and competition from central banks, those are big things to watch in this space. Well, that's all for today's show. Wall Street Petting Zoo is available through YouTube, Podbean, Stitcher, or iTunes. We would love if you would subscribe and give us a 5-star review. You can also find us on Facebook and Twitter, where I post news updates throughout the week. We don't do any advertising for the show, so word of mouth is the only way that we get the word out. If you heard anything on the podcast this week that was useful to you, please give us a like or a share on your favorite social media platform. We really appreciate your support because, this is the only way that we promote the show. You can also support the podcast financially by clicking the referral link to Webull under our YouTube video and opening a Webull brokerage account. If you deposit $100 in your Webull brokerage account, then you get a couple free stocks, and we also get a couple free stocks, and that helps support the podcast. Webull has a great community and really powerful analytics tools, and that makes it our trading platform of choice here at Wall Street Petting Zoo. Thanks so much for listening, and we will see you back at the zoo next week.
See ya.